Good afternoon, everybody, and welcome to our results presentation for FY24. If you've got any questions at any time, please can you lodge them using the Q&A button that's in your taskbar, and we'll make sure that all questions are answered before the end of the presentation. I'll hand over to Greg Bader, our CEO, to take you through the presentation.
Thanks, Jan. Thanks everybody for joining us today. As Jan mentioned, we have a couple, but welcome to send across any more. Also, at the end of this presentation is our email address at investors. So happy to chat one-on-one with anybody. I guess it's just a summary slide. It's been a year of continuous improvement across the business. So good lift in revenue, improvement in EBITDA. Refreshed products, new products and features, and improving margins across both rent and rent pay. Look, a great effort by what is a pretty small team of just 24 of us. A real focus for us over the last 12 months has been engagement with our agent customers, industry conferences, seminars, and partnerships like the one we had with MRI. So payments is complex, it's changing. Customers, both agents and tenants, expectations are changing, and it's becoming much harder for agencies to manage this without the support of a solution like RentPay. And I guess what the really exciting bit for us is that we're just at the start of this change. The tech, compliance, regulatory is getting more complex, and our promise of taking care of this arms race on behalf of the agents is really starting to resonate. Also believe that as the market starts to cool a little bit, rental vacancies increase, more competition in the market will mean that agents are more open to meeting tenant expectations in terms of choice and flexibility. So that'll be a second vector for interest and growth in RentPay as well. Might just hand back to Jan to cover off our search site, so rent.com.au.
Thanks, Greg. I'd like to start just by, I guess, giving a broad overview of the market. There's been a lot of media coverage about the rental crisis. The good news for renters is that there are signs that this is easing. We're seeing more properties being advertised for rent than we were before, and the annual rate of rental increases is slowing. Mind you, it's still about 9% per year. But recently we've seen that there are some month-on-month drops in prices in certain locations, such as Sydney, for example. How this impacts us is that in a very tight market, as we've seen over the last 12 to 18 months, it does actually affect us negatively. There are less properties being advertised for rent, and consequently, there are less people using the main property portals, such as rent.com.au, to find and move home. As we see the market loosening again, we expect our trading conditions to improve, albeit the first half of each financial year tends to be a little bit slower than the second because of the moving peak between January and March. Overall, it was a good year for the search portal. Despite those trading conditions that I mentioned, the search portal returned to profitability in FY24, thanks to a small increase in revenue and ongoing disciplined cost management. The advertising sales market is still really tough. You just need to look at results of some of our other portal businesses, such as REA and Channel 9, to see that they are struggling as well in terms of advertising sales. However, we grew by 10% year over year, thanks to some key campaigns, and we're pursuing similar arrangements for this current financial year, where we can help a partner to really stand out in front of a relevant audience for them. In terms of our renter products, firstly, our rent check product does work well in a tight market. It allows a tenant to prove their identity and to pre-clear themselves against the National Tenancy Database before they even apply. So they know if there's going to be any curly questions coming and can be prepared for that. This means that they're ready to snap up a rental when the right one comes along, and we've seen a 10% increase in the adoption rate of rent check through the course of FY24. The standout performer for us, though, was our rent bond product, which is going from strength to strength and delivered an increase in revenue of 49% over the previous financial year. A big part of this is the referral site that we set up, and we have a number of referral partners that are putting leads through that we are then being able to convert. And we've got more of those referral partners in the pipeline. There's strong interest from others. Some of them are competitors to us, but they see the value in terms of offering a good solution to their tenants. We've also elicited strong interest from potential funding partners. However, we've stuck with the partner we have, and we're working with them to make improvements, and we expect to see another big jump in revenue in this next financial year. The third product that we offer to renters is our Rent Connect product. And while customers continue to show strong interest in this product, 58,000 of them opting in the last financial year, the restricted offering under our partnership with Origin has resulted in fewer people completing a connection than before. So we've ended the partnership with Origin and are nearing finalization of an agreement with a specialist, experienced connections provider. Under this arrangement, we'll be able to offer our customers not only a broader choice of energy partners that they can connect to, but we will also be able to offer them internet, phone, and even pay TV connections. While the terms per customer will be broadly consistent with the arrangements that we've previously had in place with Origin, we expect that we will increase the number of customers connecting because of that broader choice that we provide, and that this will drive a revenue increase year over year. Thanks, Greg. I'll hand back to you for RentPay.
Thank you. So RentPay slide. So look, great growth, happy with it, but we know we need to do a hell of a lot more, both in raw customer numbers and obviously lifting our ARPUs and AMPUs. Agents still account for about 75% of all RentPay customers, so that's obviously a key focus of our sales team. Our direct consumers, the other 25%, largely consistent. We primarily use our own channels, rent.com.au being a big one, and social media. We do that to minimize our acquisition costs, and we're also looking at more consumer partnerships. So our PayLabs integration is a really good example of that. Customers get to save, Woolies, Coles, BWS, those savings they get, the 3% to 5% rebates straight into their RentPay wallet, lowers their rent. So we're looking to do more of those things. So what they do is they add value to our product, but they also add reach as well. Look, I know we've shown this slide before, but it illustrates the size of the opportunity in front of us and why we're so bullish on RentPay. We're currently sitting at about 9,300 customers today. We need to drive hard, and about 1.5 market share gets us to break even. So it's obviously a big lift on where we are today, but our product pipeline has never been stronger. All of these features have moved over the last 12 months. New payment methods coming in. As we get into, I guess, some of the more exotic payment methods, they're non-regulated. It allows us to build margins in there, which is pretty exciting. We've also previously announced that this half we'll be delivering with PayPal and Amex as well. Jan mentioned new utility partner. That will mean some changes to bill smoothing. Bill smoothing as it stands today is a cracker of a product, but our addressable market within the RentPay base is just too small. So widening that out to all consumers that have gas and electric is part of this. There's also some interesting places we intend to take this. So you would have seen in the press, there's a bit of noise about potential regulatory changes around energy efficiency, etc. So with RentPay customers, they're quite different to rent.com.au customers in that we already know their address, etc. So quite passively, we can know the address, we can pull in the consumption data over the previous 12 months, and we can recommend new plans, new services based on what would be best for you. So it's a bit of a new area for us, but something pretty interesting, something that will certainly drive ARPU and AMPU for us as we move forward. The agent channel, of course, is important with 75% of the base. And actually, what's really interesting here is that the 25% of RentPay customers that are direct So these are our consumer customers. These are the ones that choose to use RentPay, not because they've been told to. This is actually one of our key selling points for Agent. It reiterates it's a fair product, consumers like it, and you're going to avoid some of the controversy and pushback that we're seeing from other platforms in the market. For an agency, migrating between payment platforms can be pretty daunting. Our team have this down to a fine art, and we automate everything we can. We can bulk create tenant accounts and all the important bits from the agent's perspective, the property address, the tenant references, due dates, rent amount, they're essentially locked. And as a new tenant is invited to RentPay, all they really need to do is choose their payment type, choose their frequency if they wish to time shift. It takes seconds, meets all our AML, KYC obligations, and it's really testament to, I guess, the under the hood work from our product and customer service teams, and of course, working closely with our agent customers. Oof. This one, no way of hiding this one. Last half, we saw a significant churn event. We worked closely with the agency. We're still on great terms with the agency, and we worked with them to minimize the impacts to everybody. It was bitterly disappointing, and it essentially set us back a quarter. But if I can take any positives out of it, is that the driver for this change from their perspective was not RentPay. Unfortunately, we essentially became collateral damage. The agency still remains very complimentary of RentPay. They still use RentPay in other parts of their business. And look, while it was disappointing, at the end of the day, I guess we've got to remember that every agent customer we do have was someone else's churn as well. The focus on face-to-face engagement directly with the property managers is still our best channel. We're tending we're picked and choose which industry events we go to, but getting our team in front of hundreds of property managers, it's just a cost-effective way of doing all that. I just I guess want to highlight the highlighted piece on the slide there. The 800 customers in a week. That was a fantastic achievement. Now, obviously, setting up the tenants, sending out invitations is all automated. But the bit we can't normally influence is the timing of when a tenant gets around and actually does some action that they're required to do. So this agency specifically had a hard deadline. Their services were going to be turned off, and we literally had a week to do it. So all hands on deck, working with the agency. So there was a mixture of emails, SMS reminders, app reminders, and old-fashioned calls. And we got the majority of the base across. So great effort. We're now moving to the stage 2 with this same agency now, and we're looking to reduce their arrears well below industry average, which we know is a function of RentPay. ARPU, and look, a key lever on our road to profitability. Near-term ARPU drivers, transaction margins I've already mentioned, new products coming through, insurances, etc., and then extending existing services, the energy comparison, etc., all underway. The mortgage simulator is a key part of our roadmap, and I know I've talked about it before, but I truly believe this will be transformational for us and for the market. So providing the ability for a renter to demonstrate serviceability, offering them incentives to save, and we're in a really unique position that we have a platform like RentPay, which obviously regular payments, constant contact with the consumer. But then we also have a product like Rent Bond. We already have an established capability, a large loan book. So bringing those two together is how we're going to facilitate this. The product is scoped, it's designed. It does, however, come with, there's another layer of cost in terms of compliance and regulatory needs. So the timing of launch for this is really around scale for us. So we're close, we're not there yet. We're keen to get this in market. We're also actively working with a couple of partner organisations for ways to, I guess, bring this out quicker in a staggered fashion. And that's something I hope we'll see over the next few months. We've spoken about this one before as well, but increasing the percentage of our business to annuity income was one of the drivers for rent pay, dilutes seasonality, compounds over time, etc. It's a key focus for us. The other, I guess, part of it as well is that it increases our level of engagement with our customers. 4 to 6 weeks every couple of years is what we play with people on rent.com.au. RentPay changes that to an ongoing and regular interaction by managing their payments. So more engagement means more opportunities for new and different services. And this is a big call, but we're also changing the way the market works. And once again, something we're really proud of. So the new payment choices are proving popular, and we've seen a real transition. So, we're seeing direct debit decrease. We're seeing Pay ID increase. We're seeing credit cards go through the roof. We're now over 20% of consumers paying with a credit card to hack their points, etc. Giving the tenants choice around timing when they pay. This is really interesting. We've seen a measurable growth in this since, I guess, over the last 12 months due to the cost of living. Now, majority of customers still pay. If the agent wants it weekly, the customer still pays weekly, but a growing number are, I guess, time shifting. So over 60% of the people that time shift are the ones that are time shifting to synchronize to payday. So they fund their rent pay wallet on payday, and we either pay out weekly or monthly. So it's a real budget saving measure that customers are starting to use. And the last one's really pleasing. So we've always suspected, and we've always felt that giving a tenant flexibility, choice, as well as incentives to maintain regular payments would have a positive impact in terms of their arrears or their frequency of payment. But now we've proven it. We did 2 different agencies, one agency with multiple offices, large agency, one agency with a single office, and we actually measured before and after, and we've now proven that we can reduce arrears rates well below market, and in these 2 examples, reduced it by an average of 50% across their basis. So this now forms a key part of our conversations with potential new agents. Oops, sorry. So just, I guess, current outlook. Rent.com's important part of our group, key part of our group. So refreshing our connection products will drive new revenues. RentPay continues to grow, fantastic, and really strong collaborative efforts with some key partners like IRE. And our new blog was launched 2 weeks ago. It's part of our focus, or our ongoing focus, on SEO and direct traffic. We know we can't outspend REA, so we just need to do things a little bit smarter. So our blog is arguably the #1 resource for renters in Australia. So the new look, new refresh, easier to navigate, we expect to be able to lift in that area. RentPay has never been stronger. Features, performance, pipeline, brand recognition, all of those are on the way up, and we know we have more features and functionality to lift that are coming down the pipe. It is one of the most fully featured, commercially attractive solutions in market. I passionately believe the opportunity in front of us is to set the benchmark. Non-exploitative product benefits both tenants, agents, landlords. Very conscious that we need to drive sales harder, and that's our focus, directly on the consumer channel, but via our agent sales teams and through increased partnerships with industry, etc. Yeah, it's just shuffling some paperwork.
Thanks, Greg.
Look, sorry, I've just put a close off. We need to do all this, and we're obviously very conscious of cash. So managing our spend, I think, is something we do pretty well. Ongoing focus, but growth is our drive from the next 6 to 12 months. Happy to take questions. I know I do see we have a couple there.
Yes, thanks to those people that had sent questions in beforehand. The first one is regarding the churn on RentPay that you announced previously. How could you have stopped that, or could you not have stopped that, rather?
Look, that's a tough question. Look, we tried. We met with we had a good relationship with the agency. We still have a great relationship with the agency. The reality of it is this had nothing to do with payments. It was more to do with corporate structure of the business. Look, clearly would have preferred it not to happen, and we approached it logically, commercially, but we couldn't top it. And look, we know their reasons, right? And they're reasons that were well outside of our ability to change. We did manage to retain a number of customers. The product that they ended up moving to is quite inferior to RentPay, and customers that were using things like Score Builder, credit cards, etc. Some of them chose to come back on as direct consumers and stay with us. But yeah, look, it was disappointing.
The next question is, look, you need growth and lots of it. How are you going to achieve that?
Yeah, fair question. And yes, you are right. We need to pretty well triple our size to get to break even. That we don't have the funds to go out with crazy consumer campaigns. And to be honest, we've done some small ones. We've measured the CPA. It's not going to scale in the short term. So the heavy lifting is going to be done by the agent channel. For that, we need to lift our direct, and our pipeline is really strong, but we also need to push our channel partners more, current ones, new ones. So I'm not saying it's going to be easy, but it's clearly the number one challenge for us as we go forward, and it's the number one area of focus.
Thanks. I might take this next one, which is, do you have enough cash to break even, or will you need to raise money again? So Greg's mentioned growth and our focus on growth. We know that our share price is extremely sensitive to RentPay customer numbers, and that's why that's our key focus. We've just completed a $2.5 million rights issue, and we expect to receive R&D tax refund in the next quarter as well. So those cash inflows, along with reducing cash burn, should see us get close to, if not past, the break-even point. In addition, we've got about $5.7 million worth of options, listed options that have been issued. Won't take much for us to get those back in the money, and we expect that a proportion of those would be exercised prior to 31st December 2025 when they expire, so that any that do get exercised will provide additional capital for us. We've got a question from Jason about showing the same data for the last 5 years, and asking when we will expect to reach profitability. We're losing money and raising funds. So what, if anything's changing?
Good question. And I think we've kind of covered some of that in the presentation. We need to get up around 30K for break even. Now, obviously, that number is dependent on ARPU in there as well, and that is our focus. We're minimizing our cash burn. We have strategies in place to mitigate that even further. But as Jan said, on our current projections, none of us want to raise. Yes, it's incredibly dilutionary. Yes, we're all shareholders as well. We understand the impact. So our plan here is to get to that number of break even before we need to raise cash again.
We don't have any further open questions. I'll just give an opportunity for anyone who does want to answer a question to please use the Q&A button at the bottom of on your taskbar if you want to ask any questions live. Otherwise, we can always be contacted at investors@rent.com.au. We haven't received any more questions. Greg, is there anything that you'd like to say in conclusion?
I look, just appreciate everybody's ongoing support. Looking at we're at 9,300 a day, so we've pretty well mitigated the churn loss. And rest assured, the focus of this business is RentPay growth. Rent.com.au is doing well, but we know our biggest sensitivity is RentPay numbers, and that's all we're doing at the moment.
We do have another question that's popped up. Is the partnership with Novartis still healthy?
Yep. So Novartis is also a shareholder of RentPay, a minority small shareholder of RentPay. Yeah, look, we work with the Novartis guys. The Novartis are not our only source of payment provider, if that makes sense. But they certainly are the majority. And throughout the year, we released the China payments through Novartis as well. And we're chatting to them about the next iteration. Probably the biggest change in payments coming through over the next period will be the migration to Pay2 as a replacement for direct debit. We're working with Novartis on that and a couple of other providers. It's an interesting one. The timing on it is uncertain, as in the capability is there today, but it's a combination of having the capability, but also having the acceptance in the market as well. But I would imagine this is probably a Jan-Feb type release for us, but we're looking forward to it. And for those that, one of the bugbears, or if you like, one of the only barriers to wallet adoption in Australia at the moment is direct debit has that 4 days of dishonor clearing function, whereas Pay2 converts that to an instant type functionality where we can see inside the account before we withdraw the cash and know the funds are there. So that's actually going to change things up quite a bit, and essentially means that in Australia, our payment rails will be largely instant everywhere. So we're actually really looking forward to it. But as you can imagine, it's an Australia-wide payment rails type thing, and we're just sitting there ready to jump when we need to.
And I'd just like to add, so if you look at any of Novartis' presentations, they're very focused on transactions and revenue from transactions, and we really can help them with that. We've had $300 million paid via RentPay and rent and bill payments to date, and that's tracking at about just over $4 million per week. So we do play a big role in their growth as well. If there are no further questions, we might close the webinar there. Thank you very much, everyone, for attending and for the questions you've sent through ahead of time and asked during the session. As always, please email through any questions you have to investors@rent.com.au, and we'll answer them as soon as we can. Thank you very much.